Greetings, everybody. It's Jeff Scott. This is, well, it's still the 18th, close to the 19th. This is my weekend review. Another lovely weekend here in South Florida. Rains in the afternoon, but sunny, humid, and hot and sweaty golfing weather in the morning. So, last week I said that I thought the news would drive the markets, and boy, did it, including to a positive conclusion at the end of the day on Friday. I titled today, will a date with Xi lead to the next leg up? And here's today's date in my contact info. Market to me looks like it wants to go higher and reversed midweek, but some very volatile days. And frankly, if you had told me that when I came out of my lunch meeting on Friday at 2 o'clock that my stocks would be up, I would have been shocked because I got hammered in the morning. But with the Xi, the Chinese and Trump talking more towards some conciliatory comments, the markets obviously responded well. And that might predict what happens over the next few weeks, especially since the next time that they meet is November. So we may have positive news between the two until it resolves one way or the other. As always, for education purposes only, and a recommendation of the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I'm independent. I'm not affiliated with any software vendor. No one pays me to say anything. I have paid at some point for all the tools that I use. Trading involves risk. You and you alone are solely responsible. I don't think we'll have much options discussion this week. But if I do, keep in mind that those that consider options to be very risky, and I highly suggest that you have a good, strong options education and are aware of the risk before you trade options. As always, I always like to thank those people that helped to get me where I am today. I started with O'Neill and CanSlim, improved by Morales and Catcher, taken to the computer by George Roberts of HGSI with the guidance of Ian Woodward, Ron Brown's Ian's partner. George Lee, a great trader and a buddy of mine from Western Canada. We're supposed to be doing another live meeting in Orange County in November. I think like the 15th or 16th. I have to check on that date. Van Tharp, the king of money management. Sager from Superior Profits and interesting indicators, and he participates actively on the Discord site. And then my buddy John Person, author, software developer, trader, algo trader now, some automated trading opportunities, and also a good buddy of mine. I have a lot of tools that I use. You'll see on my desktop. Don't even bother trying to figure out what half of them are. I don't use them all anymore, but somehow I just like to see them there. It reminds me of all the money I wasted. I do need TradeStation or Thinkorswim, and then HGSI and EdgeRater for my analytics. Yes, from time to time I will look at seasonality programs. As you've seen here, I'll look at all three. And there are a number of websites. Speaking of websites, this is the HGSI website. Again, I'm independent. I get nothing if you sign up. I just want to point out free 30-day trial, no credit card required, and under investing strategies are a series of videos by me, Ron Brown, and others. And if you do sign up, I do have some videos that I created a while ago to help people learn how to use the program. Ron's had some updated ones. Sometimes it's good to look at both. Patterns are cyclical. This has been a year where we've just taken off the very top, and we've sort of been back and forth in an uptrend, but the minute it looks like we're going to break out, we pull back. When it looks like we're going to drop down, we break out or go up. It's been a tough market to trade. I've heard lots of people blow up their accounts, and a lot of people over the last week had some very high-profile failed breakouts. So if you think that this is a stage of uncertainty, which it's been, raising cash, smaller positions, and selling premium always makes sense. I'll talk about some things that I think are optimistic for the next week or so. But again, it's all going to be driven by news, and that could change by 9:30 on Sunday. Here's the sectors review from Friday, and you could see green everywhere. I can tell you when I looked at over 700 charts on my bottoms up, it seemed to be all over the place. Dividend payers are everywhere. There are some utilities, but MLPs, REITs were extremely strong, and some of the regional banks seem to be coming up. Hard to say that any sector had a significant weakness except for gold and silver. Let's take a quick look at the markets in TradeStation, in Thinkorswim. So this will be the dailies. Let's open them up. We'll see if it lets me open them up. There we go. Figures. Missed it. Here we go. So here's the E-mini futures. It had been living in this channel. It broke above it. It came back in. We had a new buy signal on Friday on the E-minis. E-minis, I think they want to go higher. Let's look at the full year very quickly. And you could see that we have not yet taken out the January 29th intraday high. The closing high was on the 26th. So we still have a ways to go, and that would be my target, although every time I think we're going higher, we seem to pull back into the range. But you could see this has been an up and down market. As I said last week, between the low of 24.1575 in August and the high in January, that was an easy time to make money. Tight pattern with sort of a climax run into January, and that was fun if you were long. But this is choppy, and even though the market's trending up, it's still very choppy and tough to trade. The NASDAQ, let's pull back and look at a complete year here, a little bit different in that the peak really was not too long ago, was in July, on July 25th, and it too had a sort of ascending wedge here, and frankly, I'm not sure we've broken out of it. That 50 in yellow may be support. It hit it a couple times this week, and I'm looking to see this move higher this week as well. Clearly, the larger stocks outperform the small. Here we are looking at the Dow futures. Let's look at a year, and I guess I'll go down here and open it up some. So again, like the S&P, peaking on 26th and 29th, did break out above recent highs on Friday. That's got to be bullish with a new buy signal. And then the Russell 2000, similar to the NASDAQ, pulling into the 50-day moving average and going sideways. But certainly, I don't see a very bearish looking pattern there. Speaking of bullish, notice that the VIX has come back down. And let's just, again, look at that full year on the VIX as well. And we're not quite at the level that we were at in 2017. But we are down to what's been the base range in this past 6 months. Now, when you get down much further, that's when rallies start in the VIX. But as long as the VIX is falling, that's good for the market. And something that was probably supportive of the market this week was the dollar. It had a shooting star-like candle on Wednesday and sold off Thursday and Friday. A rising dollar is certainly good for Russell 2000 small stocks, but it's not great for the multinationals. And I think what we saw on Friday was with the China news, and Thursday with some calming of the Turkey fears, the dollar gave up a little bit of its strength, and we saw some of the large cap stocks benefit. Now, we didn't see that much of a move from the Chinese stocks last week, but frankly, with the amount that the Chinese stocks have been hammered, Urendi, Weibo, YY, there's so many of them. I'm looking for a bounce in those at some point if it looks like there's going to be an agreement with the U.S. And just standing back and looking, you can see all the indexes are in uptrends, although choppy over the last couple of weeks. The VIX is down in its basic area. I think this here is a mistake. It didn't go down to a penny. And then this is the dollar futures, which did break above the 200 moving average on the weekly, and had sort of a doji on Friday. Change this back so I don't forget. Not the one I was looking for. Now, I do spend a lot of time in my PowerPoint, and I do that because it was quicker for me to do it in my PowerPoint. And what my intent here is to give you a sense of what the market's doing. And as a top-down investor, I find that to be much more important, frankly, than any individual stock. So we looked at these. Now let's look at some of the news behind. Why do dividend players seem to be doing well this week? Well, look at the 10-year and 30-year interest rates. Both are flat to falling below key areas in the market. So falling or flat interest rates will be good for REITs, MLPs, utilities, dividend payers, and home builders. And even home builders made my top list, although I didn't see any, at least a couple that I looked at were not great buys. Now, the interesting thing is the big banks are neutral to me, but the regional banks look like they want to break out as well. AD lines, you could see moving higher on both the small stocks on the left and big stocks on the right. In fact, if you look at the NYSE AD line and then all the major ETFs, the diamonds, the Qs, the spiders, the IWM, and frankly, in transports are in there all going up towards highs, and even TLT with the weakening of the dollar and the flattening of the rates, or the dropping of the rates, even popped this week. Breadth remains strong. The green arrows depict on the left the number of stocks that are above their 200-day moving average and above the 40. Both in the middle of the range, strong but not overbought. Now this is the 3-month new high, new low. This is a very fast and active, and we're getting up closer to the top. We still could have a few more positive days before I get nervous, but as this creeps up higher, we typically see the market give back something. Sometimes it just goes sideways. Now the daily McClellan, was good to see the oscillator break above the zero line, and you still are working through some of the divergences on the daily and on the weekly. Notice the daily's trying to go up, yet summation index is falling. Current buckets, take all the stocks in the S&P 1500. Where do they fall within their Bollinger Bands? 2/3 are above the midline, which is very bullish. Only 10% of the stocks are above their Bollinger Band. To me, that is a bullish pattern here, but not overbought. Now, we were flirting a week ago with HINDYs, especially on the NASDAQ, and frankly, we got pretty close to a HINDY on Wednesday before the market turned around. We were 4 or 5, I think, new highs short of a positive Hindenburg-Omen. Now, for those who are old fans of Ian, you'll recognize the Hindenburg-Omen as a signal that is relatively obscure. It's traditionally calculated on the NYSE only, and could be an indicator of a market before it collapses. And there has not been a collapse since World War II that wasn't preceded by this signal. Typically, you'll see more than one, but only 1 in 4 are a meaningful pullback, although I've seen a lot of small pullbacks after prior HINDYs. So the fact we don't have one, that makes me feel good. Looking at the market tone, and we specifically look at the Woody indicator, we are fat neutral right now. Notice on Thursday we had kahunas across most of the markets. That's the blue, reversing the day before kahunas to the downside. And that was enough to put us into neutral, which is better than negative. In sector strength, the only one that's still negative is energy. Most of the others are either positive or neutral. Now, I like to look at leaders or past leaders, and the canaries have been them, the fangs, plus. After listening to Kramer the other day, he called them the wings now, so you got to add Walmart. Now, I thought this was an interesting pattern. We clearly broke through the 50 and the 17. We had a doji, and you think about one of the things that I learned from Gil Morales is when I'm shorting a stock, that when I undercut the prior lows, recent lows, sometimes you get an undercut and rally. Well, we've undercut the prior lows here, closed at them with the doji. This looks to me like it's going higher this week. Know you news. Now, news can be good or bad, and this doesn't even reflect the tweeting from the Trumpster. But you can see it's a relatively light week. The key things would be Wednesday, not just the energy, but the FOMC minutes, the PMI, some housing and more energy numbers on Thursday. But I think the zinger, maybe durable goods, but I think the real zinger out there is going to be Mr. Powell speaking, because when Chairperson Powell speaks, the market moves, mostly to the downside, although last time the market actually picked up. And know your earnings dates. It'd be nice to say that we're done with earnings season. We are not. You still got some big ones here: Estee Lauder, Kohl's, TJ Maxx, Toll Brothers, Red Robin. I actually like their burgers. Momo, one of those Chinese beaten down stocks. Beta, another one of the Chinese beaten down stocks. Intuit, Gap, Ross, a lot of retail this week. And Hibbett Sports and Foot Locker on Friday. As I say on the bottom, it's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? Well, news-driven market ended on a positive note as U.S. and China hope to find some trade agreements prior to an announced meeting between Trump and Xi in November. This could lead to a bounce in some deeply oversold Chinese stocks. Turkey will continue to be an issue, but frankly, it's got a very minimal impact on world GDP, although it may cause some ripples in some EU banks. FANG continues to struggle, but may be near a bounce point, while Tesla and certain technology stocks, think Applied Material, for example, took a beating this week after earnings, Tesla after news. We're once again in a traditional low-volume week, which means little news can drive lots of volatility. After midweek reversal, stocks appear to want to go higher, at least pending next headlines. And don't forget the Fed minutes and Powell speak on Friday. So let's take a look at some of the action in the charts. Now, I do like to look at TradeStation, and within TradeStation, I like to look at some of John's indicators and others that I like. And specifically, what I look at are 5 or 6 signals on every index. This is a daily chart on the left. On top here is weekly and then monthly. The green arrows is John's PPS buy signal. Red is the sell. These are free in Thinkorswim, not free in TradeStation. I see a daily, weekly, and a monthly buy on the E-minis, and Thursday's when I got the buy. So that's a change from last week. The second thing I want to look at is the color of the paint bar. That's an Alexander Elder indicator. Green, he would say the buying window's open. You can buy or hold. When it's red, the selling window's open. You could sell or hold. When it's blue, it's neutral. These little dots on top here, which used to be smaller, got to change the sizing, tells me there's MACD divergence. I don't see any on the daily, the weekly, or the monthly. I'm in the middle of my envelope. That's good. I'm at 55% on the high jump, so that's not extended. And my weekly bongo, which is the middle dot, is green. So I see all good on the E-minis, and I would expect it to go higher this week. If I look at the NASDAQ futures, and of course I have to set this up. All right, let's try this blue one. So NASDAQ futures are still in the sell signal. Notice the MACD divergence signals up here, the red bars, green down here, but the short-term bond goes red. NASDAQ's weaker than the E-minis in the middle of its range. Let's look at the YM, the Dow futures, in a new buy signal. The mid-cap futures. A new buy signal came in on Friday, but you still have some evidence of weekly divergence. And let's add a layer here. And let's put in, I don't want a label row, I want it to be a blank row. So let's cut out that label row. And let's see if they got it. Russell. All right, so they don't have that one, so try at RTY. There we go. And you can see the Russell also had a new buy signal. So that's clearly an improvement over a week ago, the NASDAQ being the laggard. And if I look at the US dollar here, a new sell signal, it had its MACD divergence. It got up to 100 on the high jump on the 14th. And once you get up to 100, you almost always are going to turn around and come back. And that pretty much was the closing high before they rolled over. All right, so that's that. Now I go into HGSI. And yes, this is repetition. I'm all about the market first, stocks second and third, market, industry groups, and then stocks. So let's just go into Ron Brown's market analysis groups. Number 1, major markets plus. Let's rank them by the T1 when it pops up. And then what comes to the top, I'll make raw combo. Up to the top are small caps, mid caps, utilities, small caps. The large stocks are in the middle and the NASDAQ is below that. Just what we saw. And very quickly, just give you a sense of why I was a little bit bullish. Not on gold, that's for sure. Not bullish on gold, haven't been bullish on gold in a long time, and you can see why. It popped on Friday with the weakening of the dollar. Someday gold will go higher. It just has not gone higher yet. So let me switch this to a different view. And what do I see? A nice 45-degree uptrend in the middle of the channel. A new kahuna came in on Thursday. Weekly bond goes green. No Hindenburgs. I think the the S&P wants to go higher. If I want to look at the Dow Jones Industrial Average up near the top, not quite broken out yet, but essentially has broken out above prior recent highs. Everything's green. Also had a kahuna on Thursday. That looks like it wants to go stronger. The IWM sitting right on the 50. Moving averages are coiling. I'm surprised it doesn't show a squeeze. That wants to go higher. Also had a kahuna Thursday. And then the laggard of these, the NASDAQ, frankly, it pulled back down to the 50 and held. I suspect that this is going to move up this week as well. Looking at the dollar here, three-day pullback, or 2-day pullback. And if I pulled up the weekly, it's not going to work for me. Let's see. Let's pull the weekly up here. You can see that the weekly had a shooting star there. That doesn't look great for the dollar, but frankly, I wouldn't mind to see the dollar slow down on its uptrend. VIX, we talked about already. Volatility has come down some. Just to show you on HGSI, not the semiconductors, you could see that they actually dropped significantly on Friday, although they closed above where they opened. Hello, the VIX, the VIX, the VIX. There we are. And you can see the VIX is down, moved into consolidation area, and then I showed you gold already. So let's just look at oil, also down here on the bottom. Oil's been dropping over the last couple of weeks. It may be getting closer to a place to bounce, but we shall see. So now that I'm bullish on the market, the next question is what industry groups? So I go to 07, I hit the warehouse view. I see I've got 174, but let's go to the momentum up, 2-day force. I see I've got 73 the upside. I go momentum down, and I've got only 5 to the downside. So right away, that tells me we ended the week strong. And that's bullish to me. Educational services, entertainment content, packaged containers, cable, satellite, and some of the chemicals were the weak ones. Let's go back to the upside. Now, it's late, and I got travel tomorrow, so I'm going to very, very quickly and go through some of these, but probably not all. I mentioned before REITs looked really strong, and you can see they were first on the group, and several of these are in my buy list. So when I look at REITs, I don't usually think options. I think of buying stock because I want the dividend. So if you look at HGSI, you'll see up top, you'll see the dividend is right here. Here's earnings per share growth. I like to look at the earnings and make sure that there's enough earnings to pay the dividend based upon the stock price and the percent. So Prologis, one of the many, it broke out here of most recent highs, really breaking down highs going back a year, and broke out on Friday. Everything's green up there. Mobile breakout, pocket pivot, and kahuna. It wasn't one that I picked, but that one looks pretty good too. Public storage, I like this one a lot. Pull back to the 50, breaking out here. It's just an expensive stock, 3.6% dividend. Regency centers, office buildings, I believe, breaking out here. Pays 3.4%. Weyerhaeuser used to be a paper company. Welltower is a healthcare buildings. Great earnings per share growth, 5.2% dividend. It's certainly broken out and running. There's a lot of these that I liked. I'll look at some specifically. Here's one that really caught my eye. Why did I like DDR Corp? Now, look at the earnings per share growth, certainly positive, big time positive. Pays a huge dividend. They just spun out, I believe, their retail portfolio, and I'm not sure that's going to impact on the dividend. It might. But what I like about it is it's coming out of a squeeze, broke above the 50 with a pocket pivot and a kahuna. So this was one that made my list. So REITs pay a dividend, and there were many of them in the top stocks this week. Mass merchants, well, Walmart had some great earnings, and it's lifted several of these. Now, they don't all have great stock patterns, But Walmart surprised to the upside and broke above 100 a little bit, at least after earnings. So Walmart looks great here. Now, should you have bought it here? You had a Kahuna mobile breakout from a squeeze, but I would not have touched this personally before earnings. Doesn't have a lot of oomph coming. Earnings are out, pays a 2% dividend. Now I looked at Target. I think Target's got earnings this week. Nice uptrend. 3%. And Costco, not as, similar uptrend. Dollar General, broken out and running, pays 1.1%. Dollar Tree, below the 200, so weaker than the others. Here's one that I think really looks interesting, which is 5 below. Not because its earnings per share are so great. Its earnings are out soon, so that would be something to be careful. But it just looks like it wants to break out here. So clearly, some of these mass merchants and some of the cheaper stores that we might think about look pretty good. Now, I'm not a big fan of buying restaurants, and I don't really like Zoe's Kitchen's chart, but something happened with Zoe's Kitchen, and it came to the top of the list. So for those who are new to HGSI, one of the cool things is, you can see it had a gap up here and hardly moved at all with the Kahuna. Right-click, more info from the web, FinViz. It'll pull up with Zoe's in there, and let's see if it's a takeout or it's just on earnings. To be acquired by Mediterranean Restaurant Group. So obviously we're not interested in that. Starbucks was an interesting pattern. They had really messed up their earnings and had a couple of stumbles, but they seem to be coming back. But I think I can find better looking stocks than that. Other than that, nothing here jumped out at me. So sometimes we get screwed up in the way that we rank things if there's a buyout. Large pharma, boy, some of these look great. Now I have a big position in Pfizer. I've owned some of the others, but look at what we got here. These are dividend payers, obviously subject to price controls with Trump if he ever gets around to it. But a lot of them are moving. J&J, I love a stock that breaks above the moving average, pulls back and runs. Pocket pivot, Kahuna, coming out of a mobile breakout. Earnings per share growth, not great. Pays a 2.7% dividend. I like J&J. Love Pfizer. You can see Pfizer's broken out. Time to bought Pfizer was probably back here, where it had the Kahuna and the mobile breakout from the squeeze off of 37. Similar earnings per share growth. J&J pays a 3.2%. Merck has got a great cancer drug, certainly leading the market with Keytruda. Earnings per share look flat, 2.8% dividend, breaking out towards new highs or at new highs. AbbVie, this one is like a biotech from a portfolio that pays a dividend, spin-off of Abbott. They stubbed their toe on a lung cancer drug. I think it was interpreted wrongly by the market. Pays a beautiful 3.9% dividend. I like the earnings per share growth. I like AbbVie here. I'd like to see it get above the 200 and hold. Eli Lilly, stock's been on a tear on some new drugs. Probably getting too expensive for my taste. All right, so that's some big pharma. So certainly that J&J was something that I might come back and reconsider. Generic pharma, look at these very quickly. I'm trying to think if I heard any news on these. I was actually meeting with somebody who owns, well, not really generic pharma, but a small pharma company. Mobile breakup from squeeze, Bible gap up on Teva and a Kahuna on Thursday with pocket pivots. Don't like the earnings per share, a lack of growth, but when you see a multiple of 6, well, you know that's underneath where it should be. 8, 10, 12 would be a better multiple for Teva. So maybe Teva's getting out of its long-term funk. It's already had a big move. Keep that in mind. Teeny weeny dividend. Perrigo, not so hot. Allergan. Allergan is interesting. It's pulled back here. It's had a couple pocket pivots. Don't like the earnings per share growth. Mylan doesn't look so hot. So I think of all these, Teva was the one that I liked the most. It's kind of disappointing when you don't see any great stocks when you go through the list. IT services, I see a couple I like already and one I want to call out. Yeah, a couple there I like. So First Data, I don't think I've looked at this chart this weekend. It's had a beautiful move up, lots of pocket pivots, wants to break out to new highs. Don't like the earnings per share growth and huge volume. I mean, nice pattern though. Accenture, uptrend, sideways, breakout off the 50, pocket pivots, kahunas, mobile breakouts, 1.6% dividend. I like it, except it's expensive. HPE, a lot less expensive. Looks like it wants to go much higher, breaking out above its moving averages. Good earnings per share growth, nice dividend. I'm an IBM fan. So Bazoon is another one of these Chinese stocks that seems to have been hammered. This guy actually had some great earnings. I think a lot of people, unfortunately, probably bought the stock for earnings, and you could see it traded up here. False breakout, broke down, and I think this is probably the earnings day, and they had a big move up, and they closed down on the day. I think that this and some of the other Chinese stocks have been brought down not just on themselves, but because of what's going on with Trump and Xi. So if there's thawing there, these things may pop. EPAM is another one that looked interesting. Just a intermediate looseness. You want to buy it when it comes down closer to the 50, sort of in between here. It's squeezing, pocket pivots, no dividend. So I thought that one looked good. And I don't see anything else popping up here that made it to my list this weekend. So traditionally, I'll go through the top 10. In the essence of time, I'm probably going to stop here and see if there's anything I wanted to show you. Yeah, I want to, well, you know what? I'm going to go further. I want to talk about Apple very quickly, which is in the communication equipment. Probably it should be in a retail list. But Apple is at all-time highs, folks. Pretty amazing, despite the negative stuff that comes out from Taiwan's conductors and others. I think they're becoming less of a phone company, more of a services company. I'm not the first person to say that. Its multiple is very fair considering its growth rates. It pays a small dividend, still sitting on a bunch of cash. Wouldn't it be cool one day to wake up and see that Apple bought Netflix? Man, that would be amazing, but I'm not saying that ever would happen. $1 trillion market cap, they certainly have the cash to make some transformative acquisitions. Apple still looks very good here, even though it's at a very high price. Cisco had great earnings, and you could see it had a Bible gap up or a gap up on Thursday, and stayed up on Friday. Pocket pivots, kahunas, mobile breakouts, not a lot of growth. Earnings multiple seems fair for its growth rate. Continuing down on the list, you got midstream oil and gas. This is where you'll see a lot of sorry about that. Where you'll see a lot of big dividends. I'm not sure how to differentiate some of these. There's some really good chart patterns. Again, if you're interested in dividends, you don't want to buy options, you probably got to buy the stock. Here's ETP. This is on some kind of a transaction with ETE, one of its family members. Pull back here, pays a 9.9%. Williams, and I think ETE is going to be the survivor. Williams Company had a pullback, nice move on Friday, pays 4.5%. Enbridge going sideways here at 36, pays 5.7%. Here's ETE, move up on Friday with a kahuna, paying 6.8%. I actually own some of that. Might want to buy some Targa, mobile breakout from a squeeze, as well as a kahuna. Great earnings per share growth, pays 6.8%. Those really look good. There's a number of them in that list. I just don't have time nor interest in going through all of them. Consumer finance, some of these stocks have some dividends as well. Either love Visa or hate Visa. And Visa, I think, looked better than MasterCard. What a beautiful tight lower left, upper right, breaking out again. Earnings are out. Good growth rate, comparable to the PE. See if there's anything else here that I really liked. I don't think so. And that was number 9. Number 10, telecom carriers. These are dividend players, and some of them have actually been moving as well. I want to buy these when they're cheap, not when they're broken out. Verizon has broken out, as you could see. Still has great growth, pays a 4.3% dividend. AT&T has not broken out, pays a 6% dividend. And here's one you got to love. And it's funny, one of my partners at work said, Jeff, this is about right here. My mom needs a stock to buy, and she wants to get rich, and she's got $1,000 to invest. I think she wanted to take out dividend checks. So I looked, I said, buy CTL. I mean, it's a volatile stock. They pay a huge dividend. Who knows if it's safe or not? Then 5 days later, earnings came out. The stock gapped up. It pays a 9.2% dividend, and now the mom thinks her son is a genius, and it's because they came out and said their dividend is safe. So some of these look interesting as well. And then the next group down are the banks, and it's the regional banks. And I'll just put up Regions Finance because a lot of them look like this. You can find a bunch of stocks that are trends that broke out for this group. Some actually pay a dividend. This one pays 1.8%. Look at the earnings per share growth, twice the multiple. Looks like it wants to break out. And sometime I often play this for growth by just buying the ETF, KRE. And you see the same pattern just breaking out there. So that is how I do my top-down review. Let's take a look at the stocks that I made my buy watch list this week. That doesn't mean I buy them. It means they go, the stocks that make my buy watch list get put into my radar screen in TradeStation, and then I watch them during the week for breakouts and things like that. So let's go back here. Here's the stocks that made my list. A lot of these we've already talked about. In fact, sometimes it's good, I think, to just look at the industry groups. And let me hold on one second here. I'm not a dividend guy. I do a lot of options more than stocks, but sometimes I like to chase dividends when they are very attractive. And for whatever reason, I found so many stocks that had big dividends today that it almost made me scratch my head. So let's just look at a couple different things. So I just added dividend to the things that I should have up here. Perfect. So the first thing is, I don't search for dividend yields, but in my buy watch list, look at how many of these stocks had massive dividends. Here's Annaly Capital Management. I don't know anything about this company. I can't say it's a good company. I could say you'd be looking at buying the stock where it's kind of cheap, and it has a dividend of 11.2%. The ERG sucks, and it's been a stock that's been beaten down. But boy, it's gone sideways forever. Break above this PSAR data, break above the 200, coming out of a squeeze and pays an 11.2% dividend. DDR we looked at some of the REITs, some of the MLPs. As you can see, they're all over the place. Lots of REITs, lots of dividend payers. Another one that I liked is Walgreens Boots Science. And, this is a stock that's been beaten up, but I like the pattern. Sideways, up move, broke above the moving averages, the 8 above the 200, the 17 across the 200. Everything is green here. It makes money and has a 2.3% dividend. That, to me, looks like you're buying it at a good place. You'll notice that I have Momo. I also have Yard here, Urende or whatever it's called, as potential stocks as well. These are some of the Chinese stocks. Another one I liked was Home Depot Supply. Pull back to the 50 with a kahuna on Thursday and a pocket pivot on Friday in a squeeze. Earnings are out in September. Good earnings per share growth. I look for that one to pop. I like that one a lot. And just continuing on some of my favorites on this list. Look at Berkshire Hathaway. Insurance companies look good. And it is an insurance company at the end of the day. And Berkshire Hathaway pays a dividend. No dividend. Great growth rate. But a lot of people will buy Berkshire Hathaway and write calls against it. One of the things that my buddy George has done. Just looking through anything else that pops up. And then, I don't usually buy these truck makers, but there's a couple of truck makers that looked interesting. Cummins was one of them. And then Ferroglobe is look at this move here, a kahuna off of the 8-day, which is above the 50. Still got to get above the 200. Mobile breakout from a squeeze. Makes good money. I have a feeling there's something to do with China there. If that's the case, it'll go higher. Look at the multiple compared to the PE, and it does pay a dividend. Ferroglobe, another stock that's sort of a bottom fish. I just get excited when I see great earnings per share growth, a big dividend, and a stock that looks like it's put in the bottom with two kahunas. I like to see it get above the 50 and hold before I start chasing it. No, I don't just buy stocks that pull back. I buy stocks that are leaders. Take CSX, which is really an outperformer, pays a 1.2% dividend. So these were some of the stocks I liked. Let's just take a look at, that's all of them. I've got some banks, mostly regional banks. I've got the application software. I've certainly got a bunch of REITs, and I showed you why, based upon some of the dividends and chart patterns. Large Pharma and J&J, which I mentioned before as well. And on the big banks, Royal Bank of Canada looked interesting. Got to get above the moving average, if I remember correctly. Got to get above the 200 and stay there, but it had a pocket pivot, kahuna, mobile breakout from a squeeze. Now, I like this pattern a lot, and I keep going back to this. Sometimes you got to buy things, even if their fundamentals don't look great. But this was Tandem, which would probably be my buy of the year that I put out in April, right around here. And it just, when I start to see my indicators align with kahunas, squeezes, mobile breakouts, I get interesting. And I think several of the stocks I showed you have similar patterns. So on that note, I think I'm going to say goodnight. You guys have a great week. Once again, I want to refer you to the Discord site. Anybody can come. We don't charge a thing. This is the link which you would have to use to get the invite. If you email me, I can also send it to you. And you'll find on the Discord site a lot of interaction between HGSI users. This is some of the videos that Ron Brown has put together. Here's that Superior Profit that I mentioned. Sager, I've got Moxie Trader, which is T.G. Watkins, and then a lot of other channels here that we're actively managing. Oh, and I can't forget Paul Duncan as well. So we'd love to have you join. It's free and great conversation. So on that note, I think I'm going to say goodnight. Safe week. Do not look for one next week. I'll be traveling. Good night, everybody.